Hello, everybody. Kirk Spano and Scott Shooter Henderson with the Major Markets Weekend Report. Scott, how are you doing?
Man, I'm doing good, buddy. Besides being half asleep, we're great.
Well, I've slept a lot the last few days because I had a quick case of COVID.
Yep. Oh my gosh.
I got a call on Tuesday. Somebody who had gone to a play with Jolene last Sunday had COVID. We were sniffly, took the test. We were positive. We had some Paxlovid left from the last time, so we took the Paxlovid, got new fills, so we're loaded for the next time because we only use the Paxlovid for 2 days because your mouth starts to taste like aluminum, and then we got better pretty quick. So I'm catching up. I'm a day or two behind, but I am catching up. We talked about the growth stocks, and now we're going to talk about the major markets. Which major market do you want to talk about first?
Well, I'm just going to go through the basics, I think, here today.
Okay.
Let me jump right into Bitcoin, because I know everybody's interested in what's going on up here. The ironic thing of what we have happening here is that they're, even though we're sort of pegged right around 51 right now, they still are buying any dip down. I mean, it feels a little different with this flaggy look on the daily, even though it's a little extended for a flag. But I think that we stay in this flat for a little while, and I don't know what's going to change that pushes us actually back up towards that 54, because the volumes are steady, like just slow grind with the numbers coming in off of the exchanges. And we're not seeing a lot of large transactions like we saw just after the ETFs were approved. But
I read that in rallies like this, going into a halvening, the moving average to watch is really the 20-day, because that's about as low as it'll go. And so 45,000 is the 50-day. Do you know where the 20-day is? Is the 20-day just a little higher than that then? Must be 48, 49,000.
Well, let's put it up there.
All right, let's do that.
We're going to make it a nice, pretty color.
So that's kind of like back when I was an economics student, when we'd have to draw charts and the lines that would cross, and we'd have a dot on the chart, and sometimes where the lines cross was a little away from the dot. You know how you make your chart right? Make the dot bigger.
Make the dot bigger?
Yeah, make the dot bigger, because then where your cross is, if your dot was in the wrong spot, you just make a bigger dot. So when you make that moving average thicker, it's just gives a little bit of wiggle room.
Oh yeah, I see what you're saying. All right.
So that's way down that's about 50,000.
Yeah, can't actually put an alert on it, but that's going to be across would be about 48.5.
Okay. Yeah. So what these websites were saying, and they live on this stuff, they're saying unless the 20-day is breached and then the 20-day crosses the 50-day, right? That does a bearish rollover, you got nothing to worry about. So they're thinking, so that means that 48 to 50 range is maybe as bad as it gets. What do you think?
Yeah, I'm going to come back to the basic thesis. We always want to look on an extension for 50% back. Now, I don't believe this was our top. In other words, this 52,843. I don't believe that's our top, but let's assume that it was. Actually, I might be wrong when I say that. Let's see if I can get this one to pop.
Well, 23 fib and 38 fib are both important fibs. I have those on my charts.
Oh, Lord have mercy. It's not going to pop. Okay, so just assuming that, excuse me, it was 52,991.80 is where our high was. So if we take that as our top, and I realize that sort of invalidates, when you take legs, you should really technically measure your leg, but let's say this counts wrong and this ends up being an impulse leg and it ended the year at 52. We would be looking for equality, which is 45,754. Now, what often happens when we have an impulsive move, the retraces are shallow. We have done. See how shallow that leg is?
Yeah.
I'm
kind of expecting that now.
Yeah, I think I'm there too. But I'm sort of just trying to do the comparison. So we get we don't close below the 23.6, which is 49,576.
Okay.
When it pops, it'll be a nice push. It'll give it like sort of a catapult type thing. So, to the upside. So I think we're good. I don't, the only thing that I'm a little concerned with is the miners going into the second week of March. Bitfarms, hasn't really rolled over. It's going into its two, Marathon, really hasn't done much at all. I mean, it's sort of toppy, where we had those counts, and then Riot really hasn't done anything either at this point, sort of just stuck, but if we go back and we just look at Bitcoin in the history there, for a long period of time, there was a good correlation in the miners. And since the miners have been receiving that additional premium for the printing that they're doing, basically all the extra programs that are running on the blockchain now, we're starting to see a little distortion there. So the halving, I think the miners, as we get closer to April, could get a little heavier. So I'm really watching to make sure Marathon, Bitfarms, and Riot hold their tops going. I'd like them to get one more high and maybe catch this next push. And then I would be trimming into the second or third week of March, is sort of my thought.
Okay. So that I think that fundamentally Marathon is the best company in that group. Which one technically looks the best?
Right now, actually, Marathon probably does.
Oh, okay.
Yeah, from a short-term standpoint, as long as we don't break below this 1462, which is way down there, I think this is just the leg to the upside. We're our 3 is going to be way the heck up here.
Okay.
My issue is it's a crossroad too. And those of you who follow my work, basically at any point in Elliott wave, wave 2 is where things change here. So anytime you're around a wave 2, it can morph to a flat, an ABC, versus whatever count you might be getting. So until you're clearly above 50% back, which is 67.79, you're really not out of the woods. So, that's where it just can change. Just, buyer sentiment and, whether it's euphoric or not is going to direct us. So, but I think what the catalyst is Bitcoin adoption. We've now seen the retail get into the Bitcoin ETFs. And, there was a buzz this week on, futures having the highest volume in history. And I think what we're seeing there is the players in Bitcoin, the commercials are getting very active in the futures because there really aren't instruments for them because they can't buy options in the ETFs yet. So, that just implies more volume coming into it because as they drift more into it, and, it's like any other instruments, like I have my favorite instruments I love to trade. The reason is they're profitable. And, honestly, Bitcoin futures are profitable too. The only problem is you got to trade it 3 o'clock in the morning in Asia. So it sort of screws up your morning in the US. So it's, but there, I think that volume is going to continue to grow and that, but I'm going to come back to, I like Marathon from a look at the chart. I also like Riot because of where we are in this flat. And if our 3 is 36, I like the upside, which is why I have a piece on there. And then, Bitfarms, I actually like it more just because their cost to produce. I mean, that being the low cost producer is going to become a factor after the halving. So if miners survive to a degree where we want to stay in them, that's the question. Because, my history in mining and my own miners that I've owned, they become unprofitable really quick. I mean, you basically put out your, now it's about $50,000 a rig. And, you got your break even that comes, then you make a little money and then they're not profitable anymore. So it's not like you're going to come in and basically you buy a $50,000 machine and you make 400X. I mean, that only happens when you have extreme moves, like if everybody was buying in when Bitcoin was 23,000 and they bought some of the terahash hashing rigs, they probably are 3X. But the majority of the investors who've gone in and bought rigs are not. They're lucky if they're maintaining decent margins. So when it gets difficult and that difficulty increases, it just puts more risk on them and their expenses are higher. And if they didn't manage acquisition of new rigs effectively, it can literally shut them down or they end up getting merged with somebody else, which I think is coming too. I think BlackRock's going to buy all the miners anyways. Any thoughts on that?
I don't know. I look at all these companies and what my backup thesis is for all of them is, can they also be a energy company? And Marathon for sure can be an energy company. They're in the right place. They've got the right resources. They've already built it out. If they stopped buying servers and they only operated the machines they already have to mine Bitcoin, and they used all the excess energy they had just to sell it as an independent power producer, I think that they'd be fine. So in fact, I think it might be a very profitable business because I think those utility type clean energy companies are going to do very well. They once they get past their capex periods, they're in great shape. They're basically like the regulated utilities for demand, and at some point the capex goes away. So, they just cash flow money. I could see Marathon adding a big dividend at some point and, just really transforming over time. How long do they mine Bitcoin though? I mean, do they mine it for 4 more years or 8 more years or 12 more years? Do they mine it forever?
I think it's in their blood
So
because it is not an easy job to manage
no, but
because
the rewards keep getting smaller.
incrementally, yes, but yeah, I think I let's just think of small beginnings, and almost everyone who mines had small beginnings before crypto.
For sure.
So it wasn't just a jump in, like it was a leap, and once it's sort of like me with trading my options. I mean, it was a jump in changing factor for my life, and I mean, and I've not been a slouch most of my life anyway. So it's been where I'm not. I love it so much that I'm not going to change it. I think there's a lot of miners who are that's sort of that Tesla mentality.
Mm-hmm.
That's probably the best description. They just whether or not the company does something wrong and builds a battery that burns, they're just going to make sure they can get out of the car in time, kind of thing. So, but looking at the miners, I think they continue to build out on that, and they're looking for more opportunities for their hash rate to generate income.
Yeah.
And then the non-fungible tokens, even though many of them have failed, it's still, there are successes out there. I mean, where you have, especially in art, where they're creating different ways of us visualizing those images that are pleasant for us, and the chips is a good example. I mean, literally they became worth a fortune, and right now a lot of people who own the chips can't sell them. So I mean, it's a fad like anything else, but at the same time, as more that same non-fungible token can be used in derivatives or contracts or real estate sales or auto loans, etc.
Which I think the real estate and the art are both going to be big deals.
I agree. I mean, that's, I don't think that's, it's the same thing. Like, even though sports hasn't really had a tremendous success in the non-fungible tokens area, because it's not where, it's everybody wants to wear their shirt, the cap, they want everybody to recognize their team, kind of thing. And in the digital world, except for a label or a badge, you really, it's not the same thing, or at least I don't perceive it as the same thing. But then again, if you look at our teenagers today, their entire life is on social media videos. I mean, they wake up in the morning, their video cam's on, and they're talking to all their friends in groups. I mean, it's, so they're in a completely different world from even my children. So I don't know how that's going to manifest in how that affects crypto. But I think everybody just keeps testing the waters until something's successful. That's sort of my thought.
Yeah. All right. So Bitcoin taking over the world. One of the things I'd point out is we talked about that 5 to 10 trillion market cap for Bitcoin seems to be where it's headed, and it's at $1 trillion right now. So it's still a 5 to 10 bagger, I think, over the course of this decade, give or take. And what if I'm wrong about using Bitcoin to buy our pizza? What if we actually do start using Bitcoin to buy stuff? Then it's 30, 40, 50 trillion. Then it's huge.
Yeah. Oh, no, it's huge now, bro. It really is.
But I think 5 to 10 trillion, people have a hard time wrapping their head around. That's without it becoming currency.
Yeah.
What if it actually becomes currency, like some of the emerging markets are using it for? What if it replaces the euro? What if it replaces the yuan? I mean, what if we get to a world where only the dollar and Bitcoin exist? I mean, I don't think that's going to happen, but I think the low side is 5 to 10 trillion.
A reserve every country is sort of forced.
Yeah. Well, that's what I'm saying. I think 5 to 10 trillion is conservative.
Yeah. Well, do you really think any politician out there is going to survive that bans Bitcoin.
No,
Right?
no,
Not,
and it makes it so easy for them to take bribes. I mean,
yeah, but I
Bitcoin.
don't. I think too many people would get cooked. There's too many
Yeah,
people who won't be with it.
yeah. Well, what I'm saying is, I think the nationalists maybe don't like it, but I think politicians in general like Bitcoin because they're getting to understand the technology. I think American politicians understand that it's actually good for America. And, your dishonest politicians are like, hey, yeah, bribe me in Bitcoin. So I don't know. I think the horse has left the barn, and I, I don't think it's coming back until it's an old man. I mean, at some point, the price of Bitcoin stops going up.
Well, it flattens out. I mean,
Yeah,
it's like any other asset that, simply it comes down to scarcity,
right.
and very few assets really have true scarcity like Bitcoin has, and I've spoken about this before, that, so as long as that multiplying effect keeps growing, right, it becomes more scarce. And I don't see that changing.
Well, I continue to say that it's digital gold. It's the best explanation of it that I've heard. And the fact that it is developing Ethereum-like functionality, wow, right? I mean, if it can start doing what Ethereum does.
I mean, the pump on the market now is 100K by June.
Yeah.
I mean, that is the echo that I hear now. And, I see it every day, multiple times a day, from existing sources and new sources. And more analysts are just on board.
I have sent out 3 emails to clients in the last month, 2 of them this week, telling them you need to talk to me about this.
Yeah.
And because like I said, as I told you on the telephone, Shooter and I had a phone call the other day, and I was under a lot of pressure from regulators in Wisconsin to not get involved with crypto with clients until there was exchange traded products. Well, now we have exchange traded products, and the uptake is going to be slow because the conversations are slow and financial advisors are lazy, and compliance departments take time to catch up. I don't think you're going to see the big move in Bitcoin this year from the financial advisors. I think everything else is driving it. I think next year, after it's over 100,000, you'll get your FOMO investors, which will include retail and financial advisors. That's why I think the race to 300,000 is on. And I don't.
But the FOMO's not even started yet, right?
Yeah.
I mean, once we crack the existing high, there's going to be it'll do like any other Elliott wave counts or FOMO does. Either it's going to blow way past it. I mean, we're going to have a rocket ship, right?
Right.
Or it just pokes its head above it, and then we get some price rejection because everybody's like, "Oh, we got to take profits." Right. So those, it's either the FOMO, the fear of missing out, takes over control, or the fear of loss, full as I say, takes over. It really depends on really who starts selling, that kind of thing. Because then, if like, for example, if I tell you I'm selling my Bitcoin, well, a lot of people in the room are going to sell their Bitcoin. It depends on who. Yeah. But that the FOMO rallies are, I mean, they're usually pretty. I mean, we just look at Marathon, which is right in front of us on this chart. I mean, look at the sellers taking profits into this push here. So, and now I don't know whether that was retail or commercials, but the volume of sellers, they controlled the candle just by where we closed on the candles.
Right.
So yeah, we had buyers, but the buyers got overwhelmed and there were more sellers and it took over. So that's not as euphoric. This is total FOMO right here. When you get these kind of pushes, you got your 3 generals and then a flat, and then we win again. And to be honest with you, I'm surprised it didn't put another candle up there, put another third in, and then fail up there. But
I think it will this time. I think this time it's going to 100.
I think it's got some serious upside. I mean, it's been, in this area, it's not been one of my favorite stocks to trade, but surely in these rallies it was, and I was even trading the short side here.
I talked to some hedge fund guys. I think there is a growing opinion that Marathon is the best fundamental Bitcoin miner. And I think that you're going to see a lot of institutional money go into this one. It is on the punch card growth stocks again. And,
oh, really? I didn't notice it.
Well, because I haven't published it yet, but it will be on there.
Well, that's why I didn't notice it then, huh?
And it's getting published on Monday or Tuesday. I mean, unless I go into hyperdrive Alexander Hamilton mode tomorrow, but I think it'll be probably Tuesday. And with Bitcoin, I guess the message I would have for people is stop worrying about, is it going to get a $2,000 or $4,000 or $5,000 pullback? It's going to 100,000. It's probably going to 300,000. It's probably going to happen in the next several years for 300,000, and it could be 3 years or 4 years out. I mean, I think it's for sure this decade. So, just scale in. If you have X amount of dollars that you want to invest, don't try to do it all at once. Just put some in every week. Say, okay, over the next 12 weeks, I'm going to put in part of my money every week for 12 weeks.
Get it off your plate.
Yeah.
Do a GTC at a certain price.
Yeah.
And then put alerts on your chart. When it breaks out, make sure you're in a full position there by the time you get to the breakout.
Yeah. And where's the breakout on Bitcoin? Right at the all-time highs, right?
It's at 70 or 68.86, I believe.
Yeah. And it'll jitterbug a little bit up there. That top pink zone is where it'll jitterbug, and then it'll go through.
Yeah. And actually, we probably slice right through it because there's no back test.
Yeah. So one of the other things, and it's funny that I had this conversation at the craps table over my birthday. A bunch of crypto bros were playing craps next to me, and it was really cute. I mean, they were all dressed kind of the same, and they had nice haircuts. Yeah, it was really kind of neat. And
I always have a nice haircut.
Yeah.
I really never have to worry about it.
A cut no wax.
Yeah.
A cut no wax. So anyway, I heard him talking about it, and I always stand next to the stick person, and because that's where I like to roll from. And I looked at it and I said, "Are you guys developers or what do you do?" "No, we're, he's a developer. I'm just an investor." And I said, "Okay." And I said, "Yeah, I've been trading Bitcoin since 2016, and I've never seen anything hug the Elliott wave so well." And he looked at me and he goes, "Yeah, ABC, ABC, A12345," and he just recited it to me. And so, like, folks, when Shooter's showing you these charts on Bitcoin, and with stocks, right, you have to deal with people managing a company. So they break charts all the time. But Bitcoin has been like very pure with Elliott Wave. So I don't expect that to change anytime soon. Do you?
Yeah, well, you can see where my trend support line is down here.
Yeah.
I mean, that's ultimately, as long as we stay above that, which is way down at 42,151, it's done nothing wrong. And even still, it could break 50% of that and come back and test the 2021 lows at 32. And it's still done nothing wrong as far as an uptrend. It just has more of a breadth. I mean, that would be a leading diagonal most likely.
Right.
But the bounce off of that would be huge. I mean, it's just,
So folks, think of a sine wave. And so a sine wave can go up above and below that trend line, right? Without wrecking anything. Now, what we hope is that it stays above the trend line. But even if it went below, that's not a red alert. So, just understand, think of things the way that you hated to think about them when you took calculus class, because a lot of this is really similar. And as long as that wave has the up and to the right, you can buy almost all the dips. And that's why buy the dips has been the absolute best investment strategy for the last 20 years, since 2003. So throwing that out there. Some things last a really long time.
Okay, let's jump to major markets. Let's look at the dollar.
King dollar.
Yep, king dollar. And we got that flush down to the 200-day. And, that was really our push or rally that came in. It looks like we're going to continue to the downside. So that just is a tailwind for indices, and I don't see that changing. We had our targets that were up here at 104.87 and 105.87. And then we rejected and it reset. It's been resetting back and forth. But, I think we do have a primary wave down here. Now, one of my challenges is I try and visualize the micro macro thought of, hey, what would that mean? And that, is one reason I'm looking on the bullish side of indices. But let me just jump in this week. We had continued flow into XLU this week. So now we're looking for about 62.56. So there is some flight to safety.
That's bad news.
Yeah. I mean, either that or you have people taking out insurance because they're like, I'm trimming. And you realize there's a lot of people taking profits up here too. So, but we're not seeing it in the options where the commercials are hedging against where we're going here at this point. So on that, let me shift to the S&P. We have this ascending triangle that we're in. I mean, pretty textbook how it's squeezing. So our ranges each week keep getting tighter and tighter and tighter and tighter until it breaks. Now, one thing going into Friday's close is we rejected the top. I mean, we really poked our head just above it Friday, and then we rejected price a little bit, but nothing, that is catastrophic kind of thing. So I just think that we slow grind in this range until we get to our 520. Now, the challenging part here too is the timeline is pushing out for me versus seasonality, which I think comes to a head around March 22nd. So, I'm almost daily, I'm digging back into that to see if I can see something that changes my mind, and I'm not. So
March 11th, the special bank facility expires if they don't extend it. And the Federal Reserve is on March 18th, around there. Seasonality shifts on the 22nd of March, end of March.
Well, that's the seasonality low should come in March 22nd. So that would mean, that would mean we turn over somewhere, by the second week of March, I would think.
Okay. And tax receipts tail off in May. So, I think everything points to me for that 10% correction in March or April or May. I don't think it's going to be much worse than that. I really think it's going to be a pause that refreshes unless Powell surprises me and he's mean Jay for a really long time.
Yeah. I mean, there's got to be a catalyst, I think. The 78.6, measuring, actually, I've got my top in the wrong spot now.
Okay, and this
78.6 down around
a daily chart, folks.
Yeah, it's a daily.
Pretty short-term chart.
But it really helps you drill down in this timeline too to take a look at this. So
right.
I think 433 is about as low as we go, jumping out to the weekly, realize, our 200-day is down here at 409. So, you're
look at that RSI. Look at that RSI.
Yeah.
Yeah.
But it's drive one.
Yeah.
We're confirming here right now.
That's why the pullback is viable.
Yeah. So, we've got divergence in this high here. Okay. But that's on our weekly. If we go out and look at our daily, literally our divergence is way the heck back over here. Right. So I'm looking this as mound one, this whole grouping.
What does the monthly look like? So that's not overbought yet.
No, it won't be. As far as I doubt that we get back just with this slope. So, this puts us out.
First half of 2025 before the rally's over.
Yeah.
Huh. Who's talking about that?
Yeah. So,
I like this time frame. I like the time frame through about this time next year.
Yeah. And it's equality comes in to some degree, pretty much everywhere. That's it's one reason I watch it that way, because it's more likely going to go there at some point. And, the peaks and the troughs end up not really mattering because we still end up, topping in some way. Look at our divergence on this side. We got not a confirmed high because this is our confirmed high, but we got a lower high in RSI and a higher high in price. And then we got another lower low in RSI and a higher high in price.
So you've got the two RSI mounts there, and they both kind of double do it, right? So you got those. So this looks like it's going to be a big, super long 3 bumper.
Yeah.
I forget what you call it.
Mounts.
But, 3 mounts. So the monthly will top out next year, correct, and then top out again. And then after that, I don't know, 2026.
Well, I'm just, as I'm talking to you, I'm extending my counts because it's pushing.
Yeah. So I worry about 2026 and 27.
Well, that's going to be pretty rough up there on a cycle wave top C. The only thing with, let me see if I can see it here. I probably got too much noise up here. But realize this is our C, right? And of course, what we always can look for is, equality, which is right where it's about that. But it also can extend, or it can become elongated. So, there could be potentially huge upside just in how ABCs function, or at least the way I view it.
All right.
Theoretically,
they can go parabolic.
Yeah. Well, that's usually what an elongated C is a parabolic move. If we look at our slope and just where our parabolic curve would be, in my typical rule is I got to draw this out until I can get equality. In other words, where I have a flat similar to here, and look at how far this curve goes out. I'm way the heck off the chart, and I'm not even turning yet. It's a parabolic move would be so far out, and the chart stops working when you get way the heck up there. But look at the slope hasn't even turned to a horizontal line yet, which is what you want to get it to do to the high side up there.
So we might have a whole nother generation of stocks going up for the most part.
All right, let's jump over to the NASDAQ.
Yeah.
Only because my dog is already telling me he wants to go out. So, we really aren't pushing as much in the NASDAQ as I think we should be. I think we should have a little more flow going into the NASDAQ, especially the Magnificent Seven. But right now we're looking for an intermediate wave 3 around 451, and then we get a back test to about 438, and then we should head towards our 3. So I think this becomes more of a flat than what we see here, maybe something like this.
Okay.
Now, what sort of is surprising this week is the Russell has sort of stopped its downtrend. Doesn't mean it doesn't continue it, but, it started building a little breath again this past week, which is supportive to the upside. The challenging part is the NASDAQ, we've been, rotating out of the Magnificent Seven to a certain degree, except for the ones that are running. So the Dow and the Russells need to really lead. One of them needs to become the leader here, because the S&P is probably going to be the lagger out of the top 3. And then I think the NASDAQ rolls over, because I think rotation comes out as we start having all the earnings finished with the Magnificent Seven. I just think that's the way it's going to flow. Any thoughts there?
Historically, when the large caps get this overbought, you'll see some hedge funds and institutions trim and move that money in the small caps if they feel there's value there. And we know that small caps and micro caps are about as cheap as we've seen them in 40 years. So, 20 years especially. So I think we do get some rotation from the big companies to the small companies. And remember, you sell a couple shares of Apple, you can buy a whole bunch of small company stocks. So I do think that we see the Russell 2000 going into their rebalance in the summer, get up to that 230-ish area.
Yeah.
Who knows if it ends up being
I think it comes down to rates. How well do rates support us going into the second quarter in 2024? I mean, are we refinancing existing, financial instruments for these companies at a better rate? Because that'll create a refi boom too, where you'll have people roll over debt sooner who had to buy some of the higher rates, who've absorbed it. So you'll see more and more of the companies rolling over, but it'll take about 2%, I think.
I think the next refi boom is in a year or two. I know people who are buying houses now and they're like, oh my gosh, I got a 6.5% mortgage. My last one was 4, so, and this is a buddy of mine down in Dallas, actually, that I'll see in May. Yeah, I think it's going to take the Fed funds rate getting down to 3% to trigger the next wave of refis. And that's probably next year.
All right, let's jump over to TLT. Playing games with us. Had a pretty aggressive day on Friday to the upside. Again, like we've been flipping back and forth with the count. We've flipped bullish again. And honestly, I'm just going to say, I don't know here. It's going to go, right? Because you can't tell you which direction it's going to go yet.
Yeah, well, it's not sure how mean Jay is going to be. How mean is Jay Powell going to be in 3
Well, it went on the minutes, but it waited till Friday.
Yeah. If you've been watching all the videos from the other Fed presidents, they've all been bearish.
Yeah.
We'll see.
We'll have to see. Yeah, that's for sure. Okay, I just want to go over a couple of ETFs. I want to stay on the bullish side of who's still running, just so. Emerging markets, still just grinding higher. Looks to me like, that potentially we're going to break above this. Like I always say, drive 1, drive 2, drive 3 can always be an overshoot. So I would think we get up to about 42 at least on EEM.
Okay.
And then XLK, Select Tech, now rolled over just a little bit, on the week, but it's closed on the high side of the candle. So I'm looking at that as a flat. So I think that 217 is a given. So XLF definitely is joining the party here. I see no reason for that to win until we get up to around 42.
I think that'll be an easy short for people who are inclined at that point.
Yeah, I think it will be too. Now, looking at XLV, and of course, we've been in this for a while. I think we might be here for at least the second, maybe third quarter on the long side, heading towards 145, 149 next. And then we should have a shallow back test. But look at the curve here, the slope, it's just increasing. So, I was looking at some micro cap, while you were opening this morning, with options volume, trying to see if I can find something in select health, because I think it's going to be an area that booms this year. That's just my thought.
Yeah, I have a semiconductor cloud stock to add to the micro caps, and I'm specifically looking for companies with a market cap close to 200 million that are not on the Russell 2000 yet. Last year, to get included on the Russell 2000, you had to have like 168 or 169 million dollar market cap. There's been a little bit of appreciation, so we're looking at maybe 190 to 200 million is going to be the number this year. And I'm looking for those stocks, because if I can find companies that are going to get added to the Russell 2000 from the microcap, that's forced buying by the ETFs, and that really pushes those share prices up, sometimes 40, 50, 60%. And if I can find them, I'll put them out there. So right now I've got 4 stocks that I think that's gonna happen to, and I'm doing the research to find a few more. I'd like to get up to 6, but that is the micro cap to small cap jump, getting on that IWM, very similar to when mid cap stocks get on the SPY, except more impactful. And that's why it's a favorite trade of hedge funds and big traders. It's free money. They might make their whole year in June and July from IWM.
Yeah, but it catches my attention every time I go by. I'm not looking.
Right. No, I get it. So on the note of position traders, right? People who want to own their stuff for quarters and years versus swing traders who will own things for days, weeks, and months. If you want to trade more, if you want to make swing trading a part-time job, and you're at margin of safety investing, and you want to go over to fundamental trends because you want to do more trading, send me an email at letters@kirkspano.com, and I will give you a credit for your entire margin of safety membership to go over to Rare at Fundamental Trends, which costs $7.99 a year. So if you're into margin of safety for $400, I'll give you a $400 credit to go over to Fundamental Trends. If you really want to make the commitment to swing trading, which is a commitment, you will have to work 20 to 25 hours a week. You're going to have to do a lot of studying. But if that's your thing, if that's what you want to do, let's get you into the right service if you want to be a swing trader. Because margin of safety investing is not cut out for swing traders. It's never going to be cut out for swing traders. I'm never going to incorporate it there. So if you want swing trading, you need to go over to Fundamental Trends Rare so you can work with Shooter and learn from him how to do it the right way. And I will facilitate that by basically giving you a credit for your entire margin of safety membership, whatever you paid last time, to switch over to Fundamental Trends. So that's the offer. If that's what you want to do, try to get it done in the next week or two, because I do think that there's some interesting things to get set up for. All of the content that margin of safety investing is over at Fundamental Trends, usually with different titles, but it's all over there. And then you get Shooter on top if that's what you'd like to do. But again, I just tell you, you don't just go there and say, oh, I'm going to look in for 5 minutes a day and follow his trades. You can't do it that way. It doesn't work. You have to make a commitment to the time, become a good trader, and to keep up with things, which in my opinion is 20 to 25 hours a week, right? It's a part-time job if they're not starting and doing everything you do, but they want to understand it, right? So it's the difference between, I can read most science to understand it, but I couldn't develop a theory, take it to the lab, and prove it, right? But when the scientist publishes the research, I understand it. That's what you need to be as a swing trader. You don't have to do everything Shooter does, but you have to be able to understand after you've read. You got to read it and understand
Follow
it.
Rules. Just build a basic box of rules. When to get in, when to get out,
right,
and when to take profits. And that's
and
it.
What to keep track of. So if you're a swing trader, stock market is open 7 hours a day. You should mostly be involved during the open hours of the market.
Yeah.
So
and the hours usually for me, I'm, sometimes I start at 3 o'clock in the morning. Sometimes I start at 5, depending on when I sleep. But I'm doing the research to see what's there. But literally market hours, it's going to be, from about 30 minutes before the bell, because I want to watch the opening ranges. And then, most of my work's done by 10:30 in the morning. Then I check back at noon and check back just a little before the close to see if there's anything else I want to change. So the reality is somebody could come in right just after the opening bell, 30 minutes in. Spend a half hour just to see, check up on stuff. Maybe check back at noon or at the end of the day to see if I throw anything as far as additional trades, because they usually plop right in that timeline.
Right. You can be in and out, but 20 to 25 hours is what I'm comfortable telling you need to allocate.
I agree. Well, you need to do your homework too, so you understand when you're right and wrong.
All right, everybody, have a great weekend. Kirk has a big poker tournament tonight, and if I final table this one, Kirk will have won his second ticket to a World Series of poker event, and a shot at winning a third one.
Go get it done.
Yeah. I mean, I love to play poker on somebody else's money, so that's what I'm working towards. Trying to build a $10,000 bankroll on winnings from local poker. We are currently at about 3,500, but I've got big tournaments in the next couple months, so we'll see. And if you want to visit me in Vegas, I will be there the 14th of June until the 27th or 28th, something like that. And there will be days that I'm not available, but there will be a couple days really at the end of that run. Last couple days I'll probably be free. And then I'm probably heading to Southern California for a hot minute if I intend to go back to Vegas for the main event. And I will play in the main event of the World Series of Poker if I win $30,000. That's been my bogey, because then all my expenses are paid. I have money in my pocket, and I can basically play the main event for free. I've been just short the last 2 years, but I'm sticking with my rules, just like in trading. And if I get the 30,000 of profit, I will play the main event. And then everybody has to come to Vegas when I'm playing in the main event. All right. Yeah, I gotta have my posse. All right, everybody, take care.
All right, thanks for having me, buddy.
Yep, take care.
Until next time, folks.